Good afternoon, everybody. I welcome you all to this conference call of Morepen Laboratories Q4 FY18 results. Today on the call, I have with us Mr. Sushil Suri, who is the Chairman and Managing Director. Along with him, his colleague, Mr. Ajay Sharma, who is the CFO of the company, is also present on the call. Broadly, the structure of the call will be like that. I will hand over the call to the management. They will briefly discuss about the quarter that has gone by, how the performance has been in each segment, and accordingly, briefly after their comments on the business, we'll open the call for Q&A. I'll now hand over the call to Mr. Sushil Suri, the Chairman and Managing Director of Morepen Labs. Over to you, sir.
Good afternoon, everybody. Sushil Suri this side. I have Ajay Sharma, who is my CFO, with me. And hello. This is the second conference call. After last time we had the call was regarding the Q3. Now, since it's the last quarter of the year, we would like to discuss the performance of the year as a whole, which is FY18. And as we go forward from next quarter onward, we'll come back to the quarters. So coming straightway to the numbers. So FY18, the gross revenues have gone up from 599 crores to 610 crores, which is like 8.5% growth. And while the net profit on a consolidated basis have gone up by 25%, which is almost 3 times than the top growth in the top line. The sales revenues, of course, have been almost, I would say, growing in all segments, but we'll come segment-wise later. But in the top performers are domestic sales have gone up by 21%, home diagnostic category has gone up by 34%, BP monitors have gone up by 38%, and glucose monitors have gone up by 39%. So we'll come to the category specifically. And second is that interest cost has come down by almost 43%. And the company is becoming zero debt in next 2 to 3 months, maximum 3 months. So those are the broad lines. Profit up, interest down, category-wise growth is growing everywhere, and we are becoming debt-free. Those are the broad contours. Now we come to the segment-wise. Company as a whole, like I told that overall business had been growing pretty fast pace, and I would say that it has stabilized the pace now. We have grown at 14% CAGR for last 5 years. So consecutively, of course, sometimes the growth is more, sometimes it is less. So 14% on an average we have grown. And out of the total growth, API contributes 57% of the business as against 60%. So overall, we have between 57 to 60% of growth coming from API. Then the second category is diagnostic devices. Here we have home diagnostic devices, BP monitor, glucose monitors, weighing scales, thermal pad, heating bankers, thermometers, any device which you use at home without a doctor's, so you can use it at home. So that's covered under home diagnostics. And this is a very promising sector. This is grown at a CAGR of 24%. So year after year, we are growing at 24% on an average. And this year, it had grown by 34%. So it's a large opportunity and large growth. Then finished dosages and OTC businesses have grown with a CAGR of 10%. But during the year and during the quarter, last quarter, finished dosages have grown by 44% and OTC has grown by 21%. So there's a good growth in all the segments. And if we talk specifically of the API now, which is a major business, so we are happy to say that Montelukast is leading the pack of growth, and there's a 38% growth on quarter to quarter. And for the year as a whole, and for the CAGR, last 5 years CAGR is 16% in the Montelukast. Then atorvastatin has also shown good growth in the last 5 years. The CAGR of atorvastatin, which is compounded annual growth rate, is 25%. And for the year, atorvastatin has grown at 12%. The next big thing which is coming up is rosuvastatin, with a CAGR of 53%. So year after year, it is almost adding 50% in its belly. And during the year, it has grown 17%. And for the quarter, rosuvastatin is 11%. So if we see these are the 4 major top growing products, Montelukast, atorvastatin, and loratadine. So loratadine has grown in the quantitative terms by 6%, But because of severe reduction in prices in US market, so loratadine top line has not gone up, and the numbers have almost gone up by 1% only on a CAGR basis. Or year-on-year, loratadine sale has come down by 1% because of the drop in the US dollar prices and drop in the overall market prices. So montelukast, atorvastatin, rosuvastatin, and loratadine. Then there is one more product, fexofenadine, which has registered substantial growth at around 80% in the quarter. But we'll watch it on a year-to-year basis, and we'll watch it what's the CAGR of fexofenadine. These are the 5 molecules which constitute our core. Then within the domestic and export market, both markets have been growing, but there is some technical glitch here that after the GST regime, so around 46 crore of top line, which was classified under export earlier, now it is being classified as domestic, because in the new GST regime, there is nothing like a merchant export, so everything is domestic, and then we have started counting like that. So taking that into consideration, the domestic sale of the API has grown by 110%. It's almost doubled from with a CAGR of 40%, and there's a jump of 61% in the quarter on the domestic sales of API. Then we talk of product-wise, and the loratadine, which is including exports, has tripled during the quarter. From 17 crore export, it has gone to 49 crores, and there's a quarter-to-quarter growth of 322%. And year-to-year growth in loratadine is almost 200%, 196% to be precise. Montelukast in the domestic market has grown by 87%. Atorvastatin in the domestic market has grown by 68% on quarter-to-quarter basis. And on the yearly basis, atorvastatin has grown by 102%. So primarily loratadine, montelukast, atorvastatin, and rosuvastatin has grown by 32% in the domestic market. In domestic market, out of the total pack, 52% of the sale is montelukast, including the loratadine export because of the GST. In case we exclude loratadine export out of this pack, montelukast is almost 70% of the domestic business, which speaks high of our large bets on montelukast. So montelukast business as a whole, including domestic export, has become 91 crores, and against loratadine 112 crores, atorvastatin is 57 crores, and rosuvastatin is 59 crores. So on the top line front and on the domestic export front, both fronts we are getting good traction. And total domestic sale is 155, and total API top line is 337 crores. Now coming to the non-API business, basically one is our API business, which is a bulk drug business. Then we are, for sake of simplicity, calling non-API, which is a consumer business. Any business where we have a direct interaction with the consumer, whether it is diagnostic devices or our OTC, or we approach through the doctors. Even though we don't have direct interaction with the consumer, we approach them through the doctors. But our material is directly bought by the consumers. So that's one segment where we call it the branded portfolio. As a branded portfolio, we have grown this branded portfolio from 153 crores to 263 crores in the period of the last 5 years. And of course, there is a CAGR of 24%. So 24% CAGR, which includes diagnostics, formulation, and OTC together, out of which diagnostic devices have grown by 24%, OTC and formulation are only 10%. So as a Dr. Morepen portfolio, it is now 263 crores against 337 crore of API. So I would say overall growth on both sides, API front also and the OTC also. Now getting into the individual segments within the Dr. Morepen. First is the diagnostic business, and I shared earlier that against a CAGR of 24%, our lead product here is blood glucose monitors, where the market has grown by 38% on a year-to-year basis, and there is a CAGR of 39%. It means every year we grow 38 to 40%. On a quarter-to-quarter, glucomonitors have grown by 26%. So in glucomonitors, as we have discussed in earlier conference call also, that here is a business wherein it's a large annuity business. We invest in the meters here. We install meters wherein people buy the meters, and for lifetime they have to buy the strips. So maybe another 3 years, 4 years they buy the strips, and in case the meter becomes faulty, we give a lifetime guarantee to replace the monitor so that they keep buying the strips. So it's a very lucrative business. So total meters installed have gone up by 56%. So total meters have gone up by 56%, and we have completed the target of 2 million meters. And now, on the year-to-year basis, we have sold 68 million strips. You can imagine 68 million strips is like 6.8 crores. Strips have been sold, so many diabetic tests have been conducted, and people are using, and imagine the brand value which is going in the market. Every strip which anybody tests sugar, Dr. Morepen brand goes into that. So there is a jump of 43% in the sale of strips also. BP monitor is another category. This was a bit slow till last year. Slow means that not as fast as the glucomonitors, but BP monitors have got a CAGR of 35%, which is also very huge. And during the year, it has shown growth of 75%. To what 3/4 of the business has been added into this year. And there's a big jump in the Q4 also. In the Q4, it has grown by 57%. So large increase in glucomonitors, large increase in the BP monitors, and then the nebulizers have also shown good growth, 34% growth in the top line of nebulizers. And of course, on a quarter-to-quarter basis, it has almost 8 times, which is because the numbers are small. Then thermometers. Here I would like to highlight that glucomonitors, we have started the manufacturing in India last year, and the number of pieces what we are manufacturing every month after month is increasing. February was our peak month where we produced 1 lakh meters, which is almost 70-75% of our capacity. So that's a large thing. And this fiscal, now in the current year, by Q3, we will be starting the production of BP monitors also in-house. Nebulizers we are all manufacturing in India, but that's not in-house. We are having a contract manufacturing done from outside. Thermometers we have done trial runs, and we'll be doing a production in India. So here in devices business, we are one of the largest in terms of volume. We are one of the largest in terms of numbers and growth. And more important, we are the only one who are producing these things in India. Mostly this is an unorganized sector. People import, they bring one container, they sell it, and they are not able to compete. But we are regularized, organized player. We have cost cutting, where we have manufacturing, we have servicing, and of course we are getting a market share. The total diagnostic devices have grown from 44% to 44 crores to 103 crores in last 5 years. So this is going to be a big business tomorrow, and we are banking largely on it. Then coming to the branded formulations. This business has been growing at a rate of 10% for last few years, and quarter-to-quarter growth is 33%. And on a branded prescription market, which is more of a doctor prescription, it is 33%. But within that, nutraceuticals and vitamins have grown by 76% on quarter-to-quarter basis, which is a large thing. We added new products on vitamins and nutraceuticals, and the CAGR of 23%. Antibiotics have grown by 43%, so very good effort done by the team in Q4. And then the branded generic business, which is primarily a market-driven business, which has grown 47% in the quarter. The last few quarters, Q1 and Q2, rather Q2 and Q3, it was a bit slow because of the post-impact of GST implementation. So, but now this finished dosage business, branded generics, has come back. Out of the total business of the generics, of the finished dosages, 23% is branded generics and 77% is 23% is branded prescription and 77% is branded generics. The total pack is growing at 10%, which is, according to the numbers, it is pretty good. Now we come to the branded business of OTC, where we have our lead brand like Bandol, Lamulate, or Satisabol, Fiberdax. So these all branded businesses have grown up by 22% on quarter-to-quarter basis, while CAGR and year-on-year growth is between 7 to 6%, but quarter-on-quarter growth has started showing the recovery. So this portfolio is also largely impacted by the demonetization earlier and GST regime this year. but now last quarter it has come back. And other small brands where we have hundreds of brands like Fever-X, Pain-X, Headaches. So these are the small brands. So these also contributing 21% growth on a quarter-to-quarter basis. The lead brands are almost 50% of the total pack, around 24.52 and 24.72. Around 51 crore business is there coming from the segment, from the Dr. Morepen OTC drugs. So that's all on the segment-wise. Now we can come straight to the operational performance. And in operational performance or in terms of the financial numbers, our top line has been growing at 14% and our EBITDA is now almost stable between 11 to 12%, which had been jumping here and there earlier. And now clearly there is a good sign coming up for increase in EBITDA from 62 crore in FY17 into 65 crores. In FY18, the EBITDA has gone 68.3 crores. So regular improvement, and as we go forward, the EBITDA certainly is going to go up. But 11 to 12% is pretty stable now. And as we go forward, and since the depreciation is another component, the cash flow or the cash surplus of the company is also going up. From 57 crore, it has gone to 63 crores. And net profit, which is actually a concern for all of us, and this is what we all work for, has grown up by 25% from 24 crores to 30 crores. Basically, to be precise, 23.63 to 29.59 something. So it's 24 crore to 30 crores is the consolidated profit which has gone up. The net profit percentage is slowly sneaking up from 3.9% to 4.9%. And as we go forward, our volumes increase and our interest factor goes down, so the net profit is going to go up. As I already shared that our interest has gone down by 43%, only 4 crore rupees interest is left in this year, and in the coming year, the interest cost will go down to zero after Q2. So maybe in Q2, we have something. In Q1 will be around 1 crore and will be reduced. Basically, this is the last year we were paying heavy interest. And as you all know that we had a heavy debt pack of 750 crores years ago, and we started servicing that, and happy to announce that the total outstanding debt in the books as of 31st March is only 10.52 crores. It's less than 11 crores left, which will be paid off in the next 2 to 3 months' time. During the year, we have done a debt servicing of 41 crores, around 37 crores of principal amount and 4 crores of interest. So 41 crores out of the 65 crore which we have earned has gone down to the banks. So you can imagine from next year onward, or I would say next few quarters onward, when our bank payments are minimized or rather zero, so the company would be zooming up with the support of all of you. Then coming purely to the financial numbers. On a consolidated basis, again 610 crores of revenue. The EBITDA is 68.45 crores, which is almost 5%, against 63.73 of last year. And after interest of 4.36 crores, there's a cash surplus of 64. And then there's a depreciation amortization. So net profit is 29.59 crores. And if we see the major growth factors coming, on a standalone basis, our revenue has gone up by 2%, EBITDA is little less, and net profit has gone by 12.5%. But on a consolidated basis, our net profit has gone up by 25%, EBITDA has gone up by 5%. Out of the major growth drivers, if we see domestic API gone up 110%, diagnostic sale 29% up, glucose monitor sales 26% up, and BP monitors have gone up by 75%. These are 4 major growth drivers of the top line and for the quarter. And for the year as a whole, domestic APIs have gone up by 61%, diagnostic sale have gone up by 34%, glucose monitors have gone up by 38%, and 75% is the BP monitors. On a quarterly basis, BP is 57, on year to year it is 75%. Those are the broad numbers, and we are happy to take any questions, any clarifications which anybody may have, and want to thank everybody for continued support, and trust in the company, which we always look forward. Thank you very much.
Thank you. We will now begin the question and answer session. Participants who wish to ask questions can press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants who wish to ask questions can press star and 1. We have the first question from the line of Siddharth Basi, who is an individual investor. Please go ahead.
Yeah, hi, good afternoon, Mr. Suri, and to your CFO as well. Firstly, congratulations on a decent set of numbers, I would say. I was expecting a little more in Q4, and I'll come to that. Secondly, congratulations on being debt-free, considering the kind of scenario that you have today in today's environment with the NCLT and the banks. It's a great job that you guys have done. So my first question would be with regards to Q4. If I look at the profitability of Q4 this year versus, say, last year, it's slightly disappointing, and that also showed in the way the market dealt with your stock in terms of how it reacted to the numbers. Now, I'll come to those numbers. For example, there's been a revenue growth as well in Q4, but your profitability didn't really peak. You've been talking about how there has been consistent growth in terms of CAGR of various products, but that somehow did not seem to show in Q4 numbers. Was that because of pricing pressures of loratadine, or was it because of GST, or was it just because of other things that the company wasn't operationally able to do? Secondly, I'd like to talk about the future now that the company is debt-free. What sort of improvements would you see in your being able to purchase bulk quantities of raw materials so as to bring down costs? Also, how do you see the CAGR growth, like, for example, Montelukast adding to your top line in the coming years? And what sort of effect should there be on the bottom line? And if we talk in terms of a guidance in terms of EPS, what would you kind of give us for the future years so that it would help individual investors to kind of discount how the company is going forward?
Well, let's do one thing at a time. So I think your first question on the net Q2 results is very justified, and the whole logic here, I think the way we understand internally is that normally the annual quarter or the last quarter of the year is where these auditors come in place and they have their provisionings of various under various heads. But leave aside that part, there is certainly an impact of the market also, which I think we shared on the loratadine. There was a price cut, and our EBITDA margins or the gross margins on loratadine have decreased. And of course, even though they were classified as domestic, but technically it is export only, but there is a reduction in the margins of API. But more important is that the expenses which are pertaining to the year as a whole, few of the expenses have been booked here. But major expenses which you see which are classified in the other expenses, around 3 to 4 crore rupees is in the, I would say, upkeep and maintenance of the, I would say, the big renovation of some equipments in the API. And of course, we were expecting some regular inspections, and there were some queries from different auditors. We have inspections going on regularly.
Right.
So that's an upgradation between 3 to 4 crore rupees, which has been capitalized or I would say expensed out in this quarter. Because as per the whatever recent accounting standards, and they keep changing, so we try to expense out whatever we can during the quarter so that there is no burden on the long-term basis. And you would see even in the depreciation and amortization, there is an increase of some 2 odd crores. So we have provided additional depreciation on some old assets which were like obsolete block which were lying in the books. So we wanted to clean those things, and we have provided additional depreciation and removed that block. It's more of a conservative accounting treatment, but as you would see, in a year-to-year basis and on a cash flow basis, there's no reduction.
Right.
So these are just, I would say, we don't want to be fancied by column to column, but company as a whole, that's why I always mention that. For example, I mentioned that in fexofenadine I had 80% growth, but we are not including that growth because it's 1 quarter. So 1 quarter growth doesn't mean anything. So we have to have a trend, we have to have an analysis that, okay, are we into this thing for a long term? So as a company, we are a bit conservative in declaring the numbers. So we try to keep maximum provision wherever possible. That's on the results factor. And I think you have another question on the Monte Lucas and the cost reduction, I would say. I think that's a very interesting thing that as a company, we have been working under a lot of limitations and constraints because we were not having working capital facilities from organized banks, and we had to practically use third-party banking to get LC facilities or even to import or export. And now since we are getting debt-free and hopefully a few banks would come forward, which we already started getting offers, all banks want a debt-free company now. So, but now we'll start getting regular banking facilities, or we may not need the banking facility. But our borrowing power, our buying power certainly would increase the market. We'll have better bargaining powers, and more importantly, that we will not have to spend extra money, which we have to spend now from doing business to third parties. So, like 46 crore export is through merchant exporters. So, if I have my own facilities, I don't have to go out. Similarly, we open LCs. So we have to pay one-time cost to third party, which we'll certainly be avoiding. So there's a 5 to 6% savings in my purchases, what would happen. And then secondly would be that if we are debt-free and we have enough cash flow at our disposal, we can stock the thing. We are always stock out in many places, in the domestic market also, for export also. If we have inventory in hand for finished goods and inventory in hand for even the domestic things, so our sales will be much better, particularly in a segment like diagnostic devices. We are focusing only on gluco monitors and BP monitors, but if we have cash surplus lying with us, so we can do weighing scales in a much bigger capacity, we can do stethoscopes, we can spend more money on BP monitors, we can start fast. Basically, I would say these are all businesses which need capital investment and large working capital, which we have not been sparing. So we are seeing a large growth in the coming 2 to 3 years as we go forward. That we're not going to start throwing money here and there. But step by step, we'll keep investing in the things. Like last few years, we invested in diagnostic devices. We'll spend more money. And whatever capex is required for API, that capex would be done. So you will see overall growth. I don't say that it will be one thing. There will be 20 things which we'll be doing with the extra cash which we are able to generate.
Right. One more question. Hello? Hello?
Yes, go ahead.
Yeah. So, one more question. Now, in the conference call, Rakesh and Wala asked Lupin, and they said pricing pressures from the US seem to have now declined, and there will not be further pricing pressures as far as their product line was concerned. Can we say the same for Morepen? That drug pricing, because of increased competition and what Trump said, chances are that we'd get faster FDA approvals, and we might be able to get better prices than what we're actually getting right now.
I think that's a very mature assessment because there is a limit by which the prices can go down. So now we are almost touched whatever we are doing for domestic market and whatever we are doing for European market. Because earlier the gap was huge, and all these companies have become smarter. They have planted their people in India, they have planted their people in the Asian markets, and they know actually what is the actual pricing. So there was a time when they were giving huge premiums, but now we have come to the point. No way we can go further down.
Hello?
Hello? Yes, I'm online.
Not getting your call. I was not able to hear you, actually. There's something wrong with the line. I'm so sorry. You could please carry on.
Telling that on the pricing pressures, the prices have come enough down now so that there's no possibility of going down further. And
right.
Our product, certainly we are not much affected by the competition, but we have old route and new route, and the companies always say we want this price, which is, I would say, fair. Everybody wants. But I am happy to share that in our product, we have not allowed, I would say, permitted anybody else to enter into this category, particularly loratadine. And we have 80 to 90% market share in the last 15 years.
All right.
Give good prices, but that good prices are coming from my bottom line.
Right. Okay. So basically we can expect further margin improvement because of this, I'm assuming. And just another couple of questions. Since the company is entirely going through this entire rebranding process in terms of being debt-free, have you also applied to, say, external agencies to look at the company and to value it better? Or is that an ongoing process? And secondly, do we have any further molecules that the company might have developed which might be getting an FDA approval, or any of the new plants you're looking at in terms of, say, inorganic growth by maybe now that it might be, cash rich going for some acquisition or something?
You will keep hearing small little positive news every time, but certainly on acquisitions, we don't have anything active now. On FTA front and new molecules front, you could hear something.
Okay, we could hear something. And how soon would that be? Say, for example, are we looking at it in terms of a development period of a year or 6 months, 3 months? If you could give some guidance on that.
I like to keep quiet.
All right. Thank you so much, Mr. Suri, and congratulations once again for getting debt-free. We've been tracking you for a long time, and it's great to see that so much of debt the company was once in is now finally doing well. So congratulations on that.
According to the market environment, this is the best.
Yep.
Thanks a lot.
Thank you.
Thank you. The next question is from Saurabh Utra from RMR & Company.
Hello.
Please go ahead.
Good afternoon, sir. Sushil, sir. This is Saurabh Utra from RMR & Company, and congratulations for your first debt-free company. And I was asking you, what type of product do you want to launch after the debt-free company? Are you going to do any type of product launch? What is the revenue coming from India and USA? And my last question is that, the next product.
Yes, please.
Hello.
Yes, please, go ahead.
Yes, sir. Have you heard my question, sir?
One question is regarding...
So what type of product do you want to launch after the debt-free company? Are you going to do any product launching, and what you are expecting a revenue in terms of in the next quarter, sir?
Got it. I think on the product launches front, certainly on API front, there are regular product additions which we keep doing, but certainly when the products are small size, those come to your radar, because till the time a product becomes 50 crores, 100 crores, we do not speak much about it, but there are new molecules which are in pipeline, which certainly will be coming to you, but there's not any acquisition we are doing. But on diagnostic devices front, we'll be investing more money on glucomonitors and BP monitors, and more money would be invested in doing manufacturing in India. Whatever dependence we have in China, Korea, so we are trying to reduce the dependence and starting production in India. And while we start producing in India, and maybe after 2 years' time, we would give you a news that, okay, we have started exporting to other countries. So basically, that's a made in India factor also, and that's more of, I would say, boycott China also. That's what is going globally. Nobody wants to depend on China. So we want to become the hub and scope for diagnostic businesses in India. That's the second category.
Okay.
And on a revenue, of course, India is still our largest market. 109 crores of our business in API comes from India. And while the US is only 40 crores, then we have Spain of 21 crores, Iran, Germany, Algeria, Greece, Thailand, China, Japan, Egypt. There are 40-odd countries where we are regularly supplying out of the API. But other than API, most other business is domestic only. Within API, India is 109 crores.
Okay. So my last question is that you have opened the Heart Wellness Center. Okay. Yes. And how much you are expecting to open the branches in the coming quarter, and what you are expecting a revenue from this Heart Wellness Center?
It is still, I would say, more of a test run because it's only one center. And we get a traction and we start making it profitable, then there is an opportunity to open 25 more centers over a period of 3 years. But that will be more of a franchise model. We don't want to do any investments on our own. And naturally, it would be more on the... In which
city you are opening the branches?
For the timing, it is Delhi, and then we'll go to the tier 2, I would say metros, and then go to tier 2. So,
okay. And, sir, my last question is, sir, what is the margin you are expecting in the coming quarter, sir? In the margin front. In the margin front, you were disappointing.
I would say we have given the gross numbers. We have given you last 5-year guidance. We have shared that, okay, it is growing at such pace. So we will maintain the pace and rather will outperform a bit because of better cash flows. But I would say you have to wait for one more quarter to come us openly with the numbers, but June quarter, of course, would be better than last June. But certainly we are much positive. I can't give any specific numbers because they are sensitive information, but we are on a positive.
Okay, sir. And last question is, sir, sir, are you... Hello? Hello?
Yes, please. Yes, go ahead.
Hello?
Yes, go ahead, please.
Yes, sir. So my last question is that, sir, are you to do any merger and acquisition in the coming quarter, sir, after this debt free?
We do not have anything on the cards, but if there would be anything, certainly it will come back to you.
Oh,
otherwise,
thank you very much, sir.
Information, but I can say that there is nothing in hand. Don't worry. If it comes, we'll come.
Sir. Okay, sir. Thank you very much, sir. Congratulations for your debt free company, sir. Once again, sir.
Thanks a lot.
Thank you.
Thank you. Next question is from J.S. Trivedi, who's an individual investor. Please go ahead.
Yeah, thank you so much. I am J.S. Trivedi. My questions have been already answered by other questions herein. So I'll just say well done, Mr. Suri. Congrats. Keep doing good job. God bless. Continue and carry on. Thanks a lot.
Thank you very much. Pleasure.
Thank you. We'll move to the next question. Next question is from Rahul Mardani, who's an individual investor. Please go ahead.
Yeah, good afternoon, Suri, sir.
Yes, please.
So when can we expect the company to declare dividend? Within how much span of time? 1 to 2 years?
My CFO is sitting in front of me, he's staring. I can't speak out. Look, a dividend, of course, is being declared based on our distributable profits. Once we start accumulating enough profits, I think there are certain norms which will follow, but I would not like to comment at this stage, but
okay.
At time we'll let you know.
All right. Yeah. Thank you.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. The next question is from the line of Shekhar from Tentisoft. Please go ahead.
Hi, can you hear me?
Yes, please.
Okay. First of all, congratulations. And my question is, I know on December, the Monte Lucas got the US FDA. So my question is it already in the US market? I mean, it's already to the retailers?
No, in December, we got product approval of US FDA. And the company had filed ANDA. The ANDA has been cleared. But our shipments would start in the next quarter. We have already started receiving the orders. So it will be in the market, when you talk specifically in the shelf, it will be in the shelf in Q3. Our shipments will go in Q2. And maybe we'll take 1 quarter as a manufacturing time. So it will be on the shelf in Q3 if you want to buy.
Oh, okay. Okay, thank you. Thank you.
Thank you. Anyone else who wishes to ask a question at this time may press star and 1 on your touchtone telephone. Next question is from Siddharth Basi, who's an individual investor. Please go ahead.
I'm so sorry I'm asking again. I had a couple of other questions which came to mind. So, Mr. Suri, there has been a lot of reading on the company regarding case going on in NCLT regarding the fixed deposit holders. Could we just get some more clarity on that, please, if it's possible? And, yeah.
Actually, if we go back to the history of this case, we had FT holders, and there was a scheme submitted by us under Section 391 and 394 in Shimla. We had allotted shares to the FT holders. We are the first and only company in the country who has rewarded the FT holders by participating in the company. We were allotted shares at 11 rupees, 22 paisa or 32 paisa. And those 11 rupees have now become 30, 40, whatever. And they have been fully rewarded. But the Union of India, the Government of India, was obviously not satisfied with them because we did not listen to them about paying in cash with interest and blah, blah, blah. So we had a smart way of giving them shares, which they don't understand. Mm-hmm. So they were opposing this process, and ultimately this NCLT came up, and our 391 case from High Court of Shimla was shifted to NCLT in Chandigarh. And NCLT could not understand the commercial implication, and they simply said that as per the law, you are supposed to give this, you have not this, so we cancel this scheme, which is not possible to cancel because shares have been sold, people have sold, the shares have been issued, they have been listed, people have sold the shares, and so many other implications. We moved to the appellate authority, which is NCLAT. So NCLAT was pleased to stay that order, stay the operation of the order, which was a bit absurd. So that has been stayed now. So we will, naturally the detailed hearing would yet to go, but the stay itself means that order was not in the right spirit and not in the interest of the investors, because investors are supposed to give back the shares and take the money at 11 rupees plus interest. Even if everything, it will be 17, 18 rupees.
Right. So we're in the clear as far as that is concerned.
So it was under stay for a long time in the Himachal High Court. Now it is under stay at NCLAT.
Right.
It has, from commercial point of view, it is in the favor of investors if they get equity, because equity naturally is bound to go up. Second thing is that out of some 80,000 investors, there is zero complaint pending.
Brilliant. That's great. One last question. Since you've guided us for 5 years CAGR growth, and but a lot of that has been like backward looking in terms of where we are today. If I were to ask you, say, as a long-term investor, and I want to stay with the Morepen journey for the next 3 years, what sort of CAGR growth can I look at? Firstly, segment-wise, like for example, I look at diagnostics growing huge amounts, like 60-70%, or your diagnostic devices. So what sort of CAGR growth can I think of in the next 2-3 years as far as that is concerned? Secondly, can you give us a management guidance in terms of profitability growth in percentage terms?
I would say that once I say CAGR of say 14% for the business as a whole, it means that 14 is there. If 14 can become 15, it can become 16, because it's not going to come to 2%.
Right.
It's the reference. So I don't have to speak much here. So it will certainly, even if it becomes 20%, so the CAGR would still be on an average 15%. So I would assume that whatever is the CAGR, you can add 2 to 3% or maybe up to 5% more than the CAGR.
Okay.
If it is growing by 39%, so we assume safely that 30-35% would still be there. Because that's a new segment, and that's like a white slate. So we are going to write our name on it. Certainly, in the formulation and OTC, the CAGR is 10%. So I don't have to speak much. If it is 10%, it will be 11%, 10%, 12%. That's it. So that 10% thing cannot become 30 overnight.
Okay.
That's why I was telling that we are a conservative company, and we always say that, okay, whatever we do, it should be sustainable long-term.
Right.
Growth here and there, sometimes there are market situations. You get an opportunity, you dump material, you get growth. We can't do this.
Hello?
Yes, please.
Yeah.
So,
okay.
CAGR growth, between whatever are our annual CAGR, I would say plus minus 2 to 3% is what we'll be giving you.
Right. All right. Thank you so much.
Pleasure.
Yep.
Thank you. Before we take the next question, a reminder once again to our participants that it is star and 1 to join the question queue. Next question is of Saurabh Butra from RMR & Company. Please go ahead.
Sir, my one more question was there. Sir, is there any promoter want to increase their stake in the coming quarter or in the coming quarter?
We certainly have plans for the promoter's equity to go up, but at appropriate time certainly will be announcing that, and there are strict norms about these things, so I can't comment anything there.
So till what time you can increase increase your stake? How much we can expect?
We can do creeping acquisition by 5% every year. But since this is sensitive information, we have to go through a long procedure, the insider code trading norms and codes. So
Okay, sir. Very much thank you, sir.
Thank you. Anyone else who wishes to ask a question may press star and 1 on your touchtone telephone. Participants on the line, if you wish to ask questions at this time, you may press star and 1 on your touchtone telephone. We have the next question from the line of Chandra Kulkarni from VCK Investments. Please go ahead.
Congratulations. Do you expect the EPS CAGR at 14%?
This year CAGR of 14%?
I
would say yes, maybe push.
Are you expecting a EPS growth at 14% for next 2 years?
I would say between 14 to 16% would be the growth of the overall business. But within different segments, some segments may be growing more, some segments may be growing less.
Okay. But presently EPS is very low. Then on the low base, if it is 14%, then overall growth will be very less. EPS growth will be very less.
Yes, you're right that as the base increases, the CAGR becomes difficult to maintain. But like I shared that some segments are growing much faster. Devices business is growing at 30%. And within devices also, certain businesses are growing at 50%. In API, rosuvastatin has CAGR of 52%. So overall, we have to see because somebody would be going fast, somebody would be moving slow. On an average, 14 to 15% growth.
But when the base EPS will increase substantially because presently EPS is very low.
Yeah, in case naturally the base would go up, so I would say maybe that's what I was telling to the earlier participants, maybe plus minus 2% here and there. So, but this is a broad guidance. I would say between, if it is 14% CAGR now, you can assume between 13 to 15. So maybe two notches up or 2 notches down. That's the broad contours for the overall category.
Means, is it correct that it will take long time to increase the EPS substantially?
On the EPS front, I would say since this is more dependent on the profitability point of view, and as we discussed that since we are becoming debt-free and our profit margins of our high profit industry of diagnostic devices is increasing, API of course this year was low, but it is also showing good results. So the increase in the profitability would be much faster. That won't be at a CAGR of 14%. That may be faster. I don't have profitability CAGR with me, but that may be better.
So, thank you. Yeah.
Thank you. Anyone else who wishes to ask questions, please press star and 1 on your touchtone telephone. As there are no further questions queue, I would like to hand the conference to the management for closing comments.
Now, yes, I want to thank everybody for the continued support and the belief in the company and the long-term trust which we have with the investors and with all the stakeholders, which are very valuable for the company, and we seek your continued support and guidance. And soon we'll talk for the next quarter in the July or August. Thanks a lot. Thank you, everybody. Thank you to the moderator and thanks to Sonal from Kirin also.